Hey everyone. All right, so today's the day before Christmas. It's a half day in the market. Market closes at 1 p.m. And I really wasn't planning on being too aggressive today. I just figured I'd, open up my laptop, see if there was anything moving, and you know what? Ended up making almost $5,000. So that's why I love to, open up the computer. I can do it from anywhere in the world, even from an airport lounge, and just see, is anything moving? Is there anything interesting? And we had two great stocks right off the watch list. So while the overall market is red, day traders are green, and we are happy about that. So I'm going to break down all the trades in today's midday market recap, and as usual, any questions, any comments, leave them below. Subscribe to the channel if you like the videos, and I'll see you first thing on Wednesday morning. All right, Merry Christmas, everyone. All right, everyone. So we're going to go over the trades from today in our midday market recap, finishing. Well, I think I left my calendar back at the office, but I believe this is the 234th day of the year or something like that. And I'm finishing up $4,780.93, which is awesome. That is a really solid green day. A much bigger green day than I was expecting here on Christmas Eve. The market is closed tomorrow. It closes at 1 p.m. Eastern today, so today's a half day in the market. And I really just kind of thought, I'd pop open my laptops, here at the house, and it's a little bit of a snow day, but, see if I could make, a little bit of money, or at least, point you guys in the right direction of what's moving today and what to be careful of. But we ended up having two decent looking setups right off the watch list, CEI and ADIL, and I'm green on both of those trades. So total today, I took, let's see, 1, 2, 3, 4, 5 different entry points and was green on all 5 of them. So that's really nice, helping boost up the accuracy a little bit. It's been a little bit of a slower month, but you know what? The good news is I'm green this month. The overall market is red, but I'm up, and that's been true every single month this year except for February. So green right now, 11 out of 12 months, and that's kind of the reality of most traders. We set different goals, we manage our risk differently, and so we're able to really kind of navigate red markets and stay green because we focus on the opportunity that's right in front of us. Overall market has been red for the last 9 days, and I've been green. It's disappointing to see the overall market down because a lot of us have retirement accounts and, 401ks or whatever else that is invested in the overall market, which is the right thing to do historically because the market returns certainly better than sitting in a cash account at your savings and loan, earning 0% interest and losing due to inflation. So, if you put $100 in a savings account in 1900 and took it out today, it's still $100. Whereas if you put $100 into the market and took it out today, I don't even know what it would be. But, it's the difficult thing, of course, with being an active trader while at the same time a passive long-term investor is that it can feel days or weeks or months where the overall market's down. It can certainly feel a little discouraging because you're watching the market every single day. So when I see the market's down 600 points, I'm like doing the math. I'm like, oh man, that means my long-term 401k is going to be down. If the market's down 10%, my 401k is probably down 6%. Because 60% of it's in equities. So I'm doing the math there, and obviously that's not fun. But on the other hand, this is the reality of putting money in your 401k. You really shouldn't be checking it every single day because it's going to go up and it's going to go down. It's going to fluctuate. That's just the reality of what the markets do. So if you panic when it dips and you sell out, that's not a good idea. And you look at the S&P 500 over the last 10, 15 years, we pull this way back on the daily chart. And you can see, obviously, there's been some periods of real indecision. This isn't the first time we've seen indecision in the market. Yes, this is more sustained than the last couple of pullbacks, but, it's not necessarily, uncommon to see volatility in the market. So, every few years. So we've had this pullback that started in January, kind of got back up, and then, rolling over here. We had this back in 2015. We dropped down, we came back up, then we came all the way back down. Now, at least then we were sort of basing out. Here, we broke our base, which is a little disappointing. You go further back, and for the people in 2008 that panicked and took their money out of the market, because obviously when you were looking at the market and you saw this kind of move, that was disappointing. This drop here in 2002 and then regained back to 2008 and then pulled back again even more. That wasn't a nice thing to see if you were especially, within 2 years of retiring. But, if you were at that time in your, late 20s, early 30s, doesn't really make a difference. You leave your money, you let it work, and look at it now. You're still well green over that period of time, not to mention the return you might have gotten from dividends and things like that. I'm a fan of dividend stocks and dividend ETFs when possible, just because worst comes to worst, if you're holding 1 million shares, you're at least going to collect the dividend on those. And during the Great Depression, people were living off their dividends. Rather than sell the stocks, which were worth very little, they would just cash the dividend checks, and that was enough for them to, get through. Living, certainly more frugally than during a stronger time. But that's that anyway. So that's a little bit of a side note. But for us that are active traders, we certainly are able to navigate these waters and stay green. And the problem for me, of course, is that with $500,000 of profit this year, it doesn't really make sense for me to keep all of that in my day trading account, because generally the biggest positions that I take are only $40,000 to $50,000 worth. So this year, the $500,000 of profit that I made, I would have made that whether my account had $80,000 in it or $800,000 in it. So it doesn't really make sense to put the extra $750,000 in this account, because that's an opportunity cost. If I put that $750,000 into, a long-term, retirement account, just say I'm putting it away, aggressive growth is the target, I'm not going to look at it. When I do come back in 20 years, I will be much better off because I did that than if I kept all of that money in my day trading account, to the point where, 3 years from now I have $2 million or $3 million in the day trading account. And yes, obviously making, $500,000 on $2 million is a good return. But when you could have made that same exact amount with, only $80,000, then all that extra money is basically just sitting there idle. It's basically the equivalent of it sitting in a checking account. So all of us are going to face that point if you're a successful trader, that you're making more money than you can really actively trade with. And that's a good problem to have. And so, whether you want to invest it in real estate, or you want to buy a small business, or, you just kind of want to go passive and put it in the market and let it work, any single one of those, you're going to have headaches. Now, right now, people that are putting their money in the market are having headaches. But during the real estate, crisis, those people were having headaches. When you have concerns about, you have a flood in town, or you have, wildfires, or you have a hailstorm. All of those can create headaches for property owners. And then, with a small business, the ebbs and flows of small businesses can create headaches. So, there's even the most passive income is still going to give you some headaches from time to time. But for me, I really focus on, being an active trader with my relatively small account, taking out the profits, putting some away for tax, putting the rest away for long-term stuff. Spend some, whatever, save some, try to be smart about it, and just not panic when the market drops. People like Warren Buffett, they get excited when they see these types of drops, because these are opportunities, for them to buy really strong companies at a discounted price. So anyways, this morning, the watch list, pretty straightforward. We had our gap scanner here, historical date and time. We'll run this at 9:25 a.m. So the one stock that was at the top of the scan this morning, and I see that it looks like my YouTube is or my Facebook is glitching out just a smidge. I'm going to turn off my video and see if that helps it. Where's my mouse? It's over there. No video. So let me just check one thing. Hang on. Oh, actually, yeah, so that's not too bad. Okay, so CEI was our leading gapper. As you can see, it was gapping up a lot, and that's because it was a reverse split. So it was actually, in total, gapping down. It wasn't actually gapping up, but because of the reverse split, it appeared that it was gapping up. So on this one, we had the pre-market high, or the after-hours high of $2.50. We had this pullback. And I was just kind of watching it out of the gates for a little scalp over $1.90/$2. I wasn't really thinking about anything that exciting. It goes red right out of the gates. It then curls back up, and I jump in at $1.98 and $2 for a red to green move, the first candle to go green after this little bit of pullback. So you'll see that order here, a buy order and a buy order, 6,000 shares, and a sell order, a sell order, and a sell order. Canceled orders didn't fill, and selling the rest coming back down. Just a little small scalp. I wasn't sure if it was going to really hold up and make a big move, but it was definitely worth a try. So did okay on that one, which is good. And then the next one was ADIL. This actually wasn't on the gap scanner. However, someone had posted in the chat room that there was news on it this morning. The headline was they retire all outstanding debt, which is a really terrific catalyst. I mean, this is a great catalyst. So, we really like to see that with companies. The pre-market high on this was just about $4. But here's what I was looking at. I was looking at the daily level, $4.33. That was a really big breakout. Okay, so 433, and then the squeeze here up to $5. I knew we had no resistance until 5. And so on this one, I had it on watch. I had the level 2 window up, so I had it open just like this, ADIL. And I was looking at some other stocks, and then I look over, and I saw it squeezing up right around $4. It was about $3.80 at the time, $3.90, and it breaks through. And as soon as I saw that, I was quick to jump in. So I jumped in this at $3.99, $4.02, $4.05, adding at $4.10 and $4.17, and then putting out an order to add on the other side of the halt at $4.29. So this timestamp is when I pressed the buy button. During the halt, I pressed the buy button at $4.29 because I knew that I wanted to add coming out of the halt for the break over $4.33, which was our daily trigger. From there, my target was the $0.50. And then certainly $5, but I didn't know if it would make that move all at once for a couple reasons. Number one, CEI, which I had just traded, popped up and ended up fading. The market has been strong for small caps, but on a day like today where it closes at 1 p.m. and where there's just less traders in the market, I wasn't certain that there would be really enough people watching the stock to create that resolution. So it ends up coming out of the halt and squeezing up to a high of 455 and then fading back down to 420. I did what I think was the right move, which was selling through that move right there. And then I added back at 438 as it squeezed back up, and I doubled at let's see, where was it? 446 right here. So added at 438 to scalp this move, added again at 446, and we ended up getting a squeeze. I guess we got up to 52, and then we pulled back. And then where did I get back in? I got back in right on the first 1 minute micro pullback right here after this fresh breakout. So adding back at 84, which was right here, 79, 80. Going with smaller size on this of 1,500 shares, and then pressing the shift 1 hotkey at 84 when I was starting to feel confident, and selling at 88, 96, 96, 99, and then the rest is 79. In hindsight, it would have been really nice to just hold that whole position all the way up to $5.75. I was right. I had absolutely the right idea, but I could have just as easily seen this stock from this point here, consolidating sideways and just sort of fading, given that we're on a sort of day before a holiday and everything else. Now, the catalyst certainly helped. I think a lot of traders were probably watching this as it was hitting the scanners and everything else, but and yeah, I don't know what is going on in my Facebook feed. Sorry about that, guys. It's probably going to be the same way on YouTube. It's just it's a conflict in my computer, I think, running the chat room and Facebook. But anyways, yeah, so we got that move here up to 490, the pullback, up to 5, pullback, up to 510, pullback, and then up to 575, which is now the high of day, 575. So, or right around there, 574. Yeah, 575. So, I'm green on it, and I'm going to be happy with that. I really wasn't expecting this to be a big green day, and I'm up almost $5,000 the day before Christmas. So I'll be happy with that. Another solid green day, and we'll look to do it again on Wednesday, Thursday, and Friday, and try to finish up this year really strong. All right, you guys, so I hope everyone has a great day off tomorrow. We'll be back at it first thing Wednesday morning, and I'm really hoping that we see some continued momentum. All right, I'll see you guys first thing on Wednesday morning. Bye, everyone.
If you're still watching, you must have really enjoyed that video. So why not subscribe and get email alerts anytime I upload new content? Remember, when you subscribe, you become a member of the Warrior Trading family.